capitalism without bankruptcy is like Christianity without hell. In the midst of this great technological revolution, we should be seeing higher productivity, but something is offsetting it. And I think that what's offsetting it is this incredible amount of distortion of capitalism being caused by so much government intervention. Productivity is really the core of economic growth. And for some reason, that has collapsed to zero. In places like the UK, people in places like the US think that because of Reagan, that the government actually began a retreat in the 1980s. And I'm saying that's just not true, which is that if you look at government spending as a share of GDP, it kept rising even during Reagan's time. A lot of young people in these countries, including US and UK, say they would rather have socialism over capitalism. Why is the current system not working for them? I think the single biggest symbol of what's gone wrong with capitalism, apart from the very large companies that it has produced today, is the housing unaffordability crisis.
Ruchir, welcome to PoliticsJOE.
Thank you.
How would you describe yourself?
Well, I'd say that I'm a writer first. I began my career as a writer in a way that I was 17 years old when I started to write on global economics back in India, where I spent a lot of my childhood growing up. And so at the age of 17, I started writing for a financial newspaper there in India. And I wrote for that for many years. And then I became an investor as well. I joined Morgan Stanley at the age of 22. But I've always lived life in parallel, which is as a writer and an investor. So I don't think there's been a single month since I first started writing in the early 1990s when I have not written an op-ed or an opinion piece somewhere. And that sort of becomes then your main identity, although as I tell people that I write for the show, but I invest for the dough.
Okay.
Yeah.
That work in Morgan Stanley, how has it informed your writing? I mean, because, you know, when I'm reading your book here, this is a lot of the theories that you posit. I wouldn't say that they were the opinions or theories of someone who would work at a big bank.
I know. I think there's a lot of stereotyping which happens, right? Because if you work for a big bank, you're supposed to be of a certain kind and you're supposed to have a certain worldview. But even within these big banks, as you put them, there are different divisions which do different things. So I was always on the investing side. And as an investor, it's very different than being an investment banker. Investment bankers are much more about making deals, transactions, and being at the center of getting people together and giving advice and things. As an investor, you have to put your money where your mouth is as well, which is that, so you're like, I'd say much more research driven, a bit more intellectually curious about what's happening, and you can't afford to have too strong ideological beliefs, I feel, as an investor. Because if you end up having very strong ideological beliefs, that can come in the way of objectivity in the way you invest your money and your capital. So I'd say that it's a bit different in terms of what I did at Morgan Stanley. And I was very clear, which is that you got to be data driven, which is how I am. And I think that that's what should come across in the book as well, which is you look at data, you come up objectively with what you think the answers are. And so not to be that ideologically driven, that I think is very important as an investor. And something which I've tried to do even in my writings as well, which is that I believe in that old notion of writing, which is that when you write something, you have to come across as being unpredictable. Your regular reader has to say, what is he going to say now on this topic? Rather than this predictability, which I think has come through now a lot, which is that if you read someone, you almost know for sure what this person is going to have, what take that person is going to have on a particular subject. Mm-hmm. So I think that that's the way of trying to be a bit different or trying to stick to what you are. So as you know that I write a column for the Financial Times. Every 2 weeks, I write an opinion piece for them on their op-ed page. I'm a columnist with them. And my entire sort of drive there is that my regular reader at the FT should not be able to predict that what's this person's going to be on a particular subject.
Okay, so on that point then of being unpredictable, I would assume someone who has come from your line of work perhaps would be a fan of deregulation.
Yes.
What are your thoughts on deregulating?
Yeah, I think that I am broadly a fan of deregulation, which is the fact that, because I grew up in India and I sort of saw what regulation can do to stifle the economic freedom of people. That's, the feeling I had in India. But there are many ways in which I differ, I think, from what you would expect the consensus to be from someone working at a large bank. Like one thing, for example, I do favor is antitrust. Like I think that especially in places in the US, the big companies have gotten too big. And I feel that is something that there's something wrong with that system where you have so much concentration of power and wealth in the hands of a few people. Also, the other thing which I've been a big critic of, and I've also mentioned in the book, is this policies of central banks running very easy money, of having zero interest rates or very low interest rates, doing quantitative easing. I feel because I've seen it working on Wall Street, how the biggest beneficiaries of that tend to be the Wall Street people itself. You give them free money, they're going to go and make more money with it, and that's going to lead to even greater inequality. So I'd say that it's a bit nuanced, and that's what the book says. And the other thing which I'm very against is this bailout culture. Even though some people said that, hey, even the firm that you worked for was in a way bailed out in 2008 in the global financial crisis, I've always been very against this bailout culture. I think in a true capitalist system, there should be no room for bailing out large companies in particular, even though the thinking is now that this too big to fail concept, which is that if you have a very large company, if it fails, there'll be such repercussions down the line that you got to prevent it from failing. And my point is that in capitalism, if you're going to start to bail out companies, that takes away from what capitalism is all about, as a line I have in the book as well, which is that capitalism without bankruptcy is like Christianity without hell.
Okay, so let's pick that apart for a moment there, because that's a really interesting theory. Because on one hand, you're arguing about inequality and the size of these companies is leading to a dearth in inequality. But on the other side of that, you're saying, well, we shouldn't bail out these big companies. If we look at what happened during the UK financial crisis, there was a weekend there where there was a potential run on the banks was going to happen on Monday morning. If Gordon Brown had not resolved the crisis over the weekend, people would have not been able to withdraw money on Monday morning, and many transactions would have halted. If we hadn't bailed out those companies, would it not have been the little person who would have been affected? When you're presented with that sort of conundrum, is it right? Is it moralistic to let a big company go bust?
But I guess, 2008 was an exceptional circumstance. But what I speak about in the book is that look at the chain of events that led to 2008 and also what's happened subsequently. For example, a couple of years ago in the US, and, they bailed out Silicon Valley Bank, which was a bank really for deposits of rich companies out of Silicon Valley in a way. And they did that again preemptively, fearing that if we don't bail out the Silicon Valley Bank, then it's going to have a cascading effect. So it's become one of those things now where big or small, preemptively or try to preventively prevent a bigger crisis, we are bailing out companies. And the history of bailouts is this, that capitalism has really been there, as in many Western democracies like US and UK, for the last 250 years or so. What I chart in the book is that right up until the 1970s, if you look at the US, there was no culture of bailing out private sector companies, none. And then it starts. But once it starts, then you set the expectation, which is that every time there is a crisis or something happens, that you're going to bail out a company. And then there's no stopping it, because if you don't bail out, then, the whole house of cards can come falling apart. So when do you sort of draw the line and say enough is enough? So fine, if you have to bail out someone, as you say, in a very extreme circumstance, maybe that should be allowed. But what's happening progressively in US and UK and other countries in the West is that you're bailing out companies at the slightest hint of trouble. Right. And that, I think, is wrong because of two reasons. One, by doing that, you're letting a lot of deadwood survive in the system. And by doing that, you're not allowing new companies to form at the rate that they should, because so much deadwood is in the system. It's what I call zombie companies. It's a term that was introduced in Japan back in the 1980s. That you're a lot of zombie companies that don't even earn enough profit to be able to service their debt. That's what zombie companies were called. If you look at the Western media then, US, UK, in the 1990s, they would almost mock Japan for having these zombie companies, saying that we in the US and UK don't do these things. That's like a Japanese twist to capitalism. At that point in time, the UK and the US, the number of zombie companies as a share of the total companies that you had listed was about under 5%, 2 or 3% or so. Fast forward today, the number of zombie companies that you have in the US by some measures is close to 20% of the total. In UK, it's even higher than 20%, the number of zombie companies that you have. And it's in fact even more than Japan now on some measures. So I'm saying, so this is the progression that we have had, which will be keeping alive so much deadwood. We are bailing out companies. Government resources are going towards that. And by doing that, you're letting the big get bigger in a way. And you're also not allowing new companies to come in at the same rate. So the other statistic I talk about in the book is that the number of new companies that you have, the formation of new companies, that for many decades has been falling. It went up a bit after the pandemic, just because you had many closures during the pandemic and the new companies came up, but it's been falling. So this is, for me, the heart of the argument of the book, that this concept of capitalism is about taking risk, is about allowing companies to fail, is about creative destruction, as an economist put it back in the 1920s or so. And that is being undermined by this constant culture of government intervention, of bailing out, too much regulation, too much government spending. So the role of the state, the government, has increased considerably. If you look at every metric, government spending as a share of GDP, the number of new regulations, the bailouts, the role of the central bank in propping up asset prices, all of that has gone up considerably. And I think that we are sort of not stepping back and seeing what's been the effect of all this. And I argue that there have been two effects of all this. One, that productivity growth in the economy has been declining. In UK, it's virtually zero now. There's no productivity growth happening in this economy. It's collapsed. It used to be 2 or 3% or so. It's collapsed virtually to zero now. Why has that happened? That in the midst of this great technological revolution, we should be seeing higher productivity, but something is offsetting it. And I think that what's offsetting it is this incredible amount of distortion of capitalism being caused by so much government intervention. And when you have lower productivity growth, you in general have much lower economic growth, because the two drivers of economic growth tend to be productivity and the amount of people coming into the workforce. But productivity is really the core of economic growth. And for some reason, that has collapsed to zero in places like the UK. And I'm trying to examine why has that happened. And the role of the state and the government is, for me, a big reason for that collapse in productivity.
And that's why you say that big government, the era of that, really hasn't. I mean, that's been since Reagan, right? We've had too large of a state. Is that what you're arguing?
Well, what I'm arguing is that it's been a progression that started off. So for the first 200 years of capitalism, in a way, right up until the 1920s, the role of the state was very limited. In fact, like in places like the US and even UK, in the US in particular, government spending as a share of GDP was 3% or something. So it was basically meant to do the defense of the country or deliver your mail, some very basic functions. Then you get the Great Depression. And then there is a feeling that we need to do something now to create a welfare state. So then the role of the government begins to increase. And you can argue that's justifiable because, like in a time of a depression, you don't want too many people standing in lines and that kind of poverty to sort of show up because of that. So you have an increase in the government. But my point is that for the last 100 years, it's been progressively increasing. And a lot of people in places like the US think that because of Reagan, that the government actually began a retreat in the 1980s. And I'm saying that's just not true, which is that if you look at government spending as a share of GDP, it kept rising even during Reagan's time. So today in the US, government spending as a share of GDP, total, federal and state, is approaching 40% from less than 3% 100 years ago. So it's been a steady progression up. Then you look, and it's not just government spending. If you look at the number of regulations, the US now, this is supposed to be like a much more deregulation kind of paradise. The US imposes around 3,000 new regulations a year on its people. And then over the last 20 years, the number of regulations that it has withdrawn is 20 in total, over 20 years. And who does regulate? I think this is a very fundamental issue that, yes, there has been some financial sector deregulation, and you can argue that's what led to an explosion in the financial sector. But outside of that, in many other sectors, if you're like a restaurant owner or you're looking to open a small business, the number of regulations that you have to deal with today is multiple compared to what it used to be. Like even in my industry, if you want to start a new fund today, the cost of doing so has gone up 10 times over the last 20 years because you have so many legal compliance, this cost, that cost. Now, who benefits from this? It's the large companies. Because the large companies have the resources to pay for all this regulatory stuff. The small person starting out, they don't have the resources for for doing this. So I think that that's the real challenge which I think has taken place out there, which is that the regulation is benefiting the large companies and is hurting small companies because the cost of bearing those regulations is incredibly high for the small companies. And also the lobbying, that when you have new regulations which come, who are the people who are able to lobby and influence how the regulation is written? It's the large companies. If you look at the capitals of the world today, like in Washington, the maximum number of lobbyists are people working for the very large tech companies. So whenever a new regulation comes, they're able to work around how the regulation should be in favor of those companies, and not and it hurts typically the new or the mid-sized companies. So I think it's a very fundamental understanding that regulation tends to be pro-incumbent, as I put it. Whoever the incumbent is, it tends to help them, and it hurts the small and mid-sized businesses.
But what's the resolution there then? I mean, the resolution I would assume is that you need to break this sort of the link between the huge firms that are in the US and the power that they hold over perhaps the US government.
Yes.
But I mean, is that possible?
Well, I'd say that that is something which should be done if you want to truly change capitalism, because this is something which is there in places like US and UK. There are so many towns in these countries now, or even cities where there's only one employer, one large company dominates that town. And so the people working in that town feel almost indentured, that they have no choice but to work for that company. So they have no bargaining power for their salaries, for their wages, or the choice is gone. So this incredible domination of large companies in every which way, I think, is a perversion of capitalism. Capitalism is supposed to be pro-competition. It's supposed to encourage new businesses to come. There's supposed to be churn, that like the companies that dominated at one point in time are supposed to fade and make way for new companies. So I think that that's what's gone wrong with capitalism today, which is that it's become much more sclerotic, which is that you don't have that much churn. The competition has gone down, and the domination is far too great by the large companies, and that's having a lot of negative consequences, including the fact that so many towns are dominated by one company. And even if you look at there's the concept that has not been spoken enough about is corporate inequality, which is that if you're working for a very large company, you tend to earn so much more than if you're working for a mid-sized to a small company, because the large company is making these extraordinary profits and is able to pay their people so much, but the other companies are just not able to do it. So it becomes a vicious cycle.
How does this affect the younger generations, particularly millennials, because they have really grown up, they've come out of the 2008 financial crash, and then they've experienced, well, a recession and then some de facto recessions. How are they coping in this market?
Well, I think that this is a reason why a lot of the young people today are very disaffected by the current economic system. Like in places like the US, in fact, and we just saw that, in the much talked about New York mayoral election, that a socialist, a self-described socialist, won that primary and is all set to become New York's next
He
mayor.
wants to deregulate a lot of he wants to remove a lot of the regulations that are on small businesses,
Yes,
which is what
that's
you're
right.
talking about.
Yeah. So, but he's speaking. But I think there's a more fundamental point there, which is that a lot of young people in these countries, including US and UK, say they would rather have socialism over capitalism. That is such a telling statement. Why has that happened, right? That's one of the things I've tried to address here, which is that because I think a lot of young people today think that the system they have is capitalism. And they're not benefiting much from it. So it's a reaction against whatever the current system is. Now, I'm not sure they know what exactly socialism is. I think I do, because I came from a socialist country. India was a very socialist country in the 1970s and 80s when I was growing up in the 80s in India. And I could see the ways like socialism, how it curbs your economic freedom, leads to shortages, leads to long lines, and all the other problems. But I don't think that here they know what socialism is all about. But it appeals to them because they think that whatever the current system is not working for them. Why is the current system not working for them? I think the single biggest symbol of what's gone wrong with capitalism, apart from the very large companies that it has produced today, is the housing unaffordability crisis, which is that most young people today cannot afford to buy a home. And why has that happened now? Right? It's, I think, happened also because there's been so much housing sector regulation. It's very hard to build new homes there. So the supply has been badly crunched. So, in fact, by some measures, in places like the US, the total number of new homes being built today is the same as the 1950s or so, even though the population is much larger than that, because it is so difficult today to have new supply come to the market because of the incredible amount of regulations you have. So a lot of the young people today cannot afford to have their own home because home prices have gone up a lot. Demand is going up as population growth has increased. Also, demand has gone up because when you've had very cheap money, a lot of private equity and other firms are able to accumulate a lot of homes and keep it on their books. But the bigger problem here is the fact that supply is so badly constrained. And when supply is so badly constrained, it leads to higher prices. And the average young person coming to the housing market is not able to afford a home. And owning a home, I think, is such a fundamental belief of people that they want their own home. So this is how I think it's affecting a lot of young people, that it is leading to this housing affordability crisis. It's also creating problems, I think, in terms of they've looked at places like the US today and even UK. The social mobility, the economic mobility today is at all-time lows, which is that if you were born in a particular neighborhood, the chance that you can move out of that today are much lower than what it used to be 40, 50 years ago. If you were born in a particular strata of income today, the odds that you can sort of graduate to a higher strata today are much lower than what it used to be 40, 50 years ago. Most people in places like the US today say that they're unlikely to be better off than their parents. 40, 50 years ago, most young people, it was the American dream to be much better off than their parents, and most people thought they could realize their dream. Today, they can't realize their dream. So these are some of the issues that have been caused by what's gone wrong with capitalism.
So is this manifestation of capitalism, or this particular stage, is that halting the American dream? Is that halting social mobility?
Yes, absolutely. So I think that that's why you have so many young people today disaffected with the current system. And I think that UK and Europe are in even worse shape on some of these metrics. Social mobility in places like UK is even lower today than in the US. So, in Europe today, government spending as a share of GDP in places like France has reached nearly 60%, 60. How do you call a country a capitalist country when the government as a share of GDP is 60%? And the problem is that what is that government delivering for you? Are we happy with the public services that we're getting from the government? We are not happy, even though the role of the government has increased, so incredibly. So I think that's what's happened, which is that the state has become too big and too onerous, and is not being able to deliver on the few things that it should. And in contrast, one of the sort of very interesting chapters, I think, from my perspective in the book is where is capitalism working? And I talk about countries like East Asia, like Taiwan or Korea, where the state as a share of GDP is much smaller, but very technologically efficient and is able to deliver outcomes much better. So I think that the role of the government needs to still be there in our societies, but be more targeted and be more technologically efficient. We need to build a state for the 21st century. Instead, we have this state that keeps just keeps growing, takes on too much responsibility, and then the outcomes that it's able to produce are so inefficient, and it leaves the average person unhappy with it. Instead, what the person is left with is that the government debt keeps going up because we're running these deficits all the time. In the name of helping the poor, in the name of helping the middle class, the government keeps spending this money, but we're running, these massive debt and deficits, which keeps interest rates higher than they should. So, it just compounds the problem. So I think what I'm trying to get here, and like here in the book as well, is that this is really a history of capitalism, and it comes to the conclusion as to what's gone wrong with it. Why are so many people unhappy today with what is defined as capitalism? And the conclusion I reach is that what we have today is a very distorted form of capitalism. And how do we get this system to start working for us again? That's what I'm trying to get at.
So you actually almost sound like a Labour government minister, because that's the premise that they set out. Every time that we hear them sort of justifying new cuts that they have to make, their justification is that we are spending too much, but their solution is to make cuts. So, for example, this afternoon there'll be a bill laid down in Parliament on its second reading. Should we restrict the welfare budget? Should we take away certain PIP payments? Are those the right savings to be making, or do you think that governments can be looking elsewhere?
Unfortunately, there's no, this is what happened, that you're left with no choice now because the state has grown so much. The UK is running very large government debt and deficits. So, it's left with no choice. And that's my entire issue, that if you're left with no choice, you have to, make such difficult decisions, even though it sounds painful. Like, if I had a choice, I'd like everyone to, be able to get lots of benefits. But what do you do when your debt and deficits have reached such unsustainable levels that you're left with no choice but to do some of these kind of things? But it's about making the smart choices about where you can cut, where you can prioritize, and also the fact that on the taxes also, you can raise taxes, but today people have choices. Like even in London, when I speak to so many of the people here, so many people have moved away to Dubai or other places just because the taxes on them have gone up so much. So
Are these people at the top of the scale, though? Would you say that these are people who say do work for large investment banks, or are these more middle class people? Because I would say anecdotally, a lot of middle class people I know, yes, have moved to Dubai because of the tax rates.
yes,
But is this also the people who are at the top of the ladder?
yes, of course,
Right.
yeah. So it's like both of them. But but the issue is that then what happens to your taxes, right? Which is that you can raise the taxes and feel good about it, that you've done something morally right to soak the rich. But then if people are going to move away, what purpose has that really served? So I think we have to think about what the objectives are. As I say about the government, that the road to hell is paved with good intentions. So the intentions are good in terms of what they want to do. I mean, I don't doubt that. But the outcomes tend to be, these suboptimal outcomes, or in fact, negative outcomes. And that is what I'm saying, that for some reason, economic growth in places like UK has been falling consistently for the last 40, 50 years or so. The average economic growth rate. It makes us the pie smaller, makes people not happy because you have to divvy up the pie among a larger number of people, even though it's growing so much more slowly. So I think that we have to get back to dealing with these problems. That what do we do here? How do we make UK more competitive? And even in UK, you spoke about welfare spend, but even though the government spending has gone up so much, investment, which is really the key to long-term growth. You have to invest in infrastructure, invest in things. Investment as a share of GDP in UK today is much lower than its counterparts in other developed countries, at about 17% or so, whereas in other countries it's more than 20%. So, obviously there's something fundamentally wrong with how UK is spending its money, even though it's spending a lot.
And they're so frightened to invest. I mean, in the autumn statement, the first statement that we had from the Chancellor, Rachel Reeves was arguing that, the money that they're going to invest into green energy and, the certain other rail infrastructure projects. And a lot of that has seemed to sort of peel away. Do you think that there's a reticence, or do you think that governments are almost, why aren't they investing? Are they frightened to spend their money?
Well, I'd say in terms of the fact that, there's something wrong with the investing environment where people aren't feeling confident about the future to be able to do that. So I think it's a statement in the confidence people have, and even businesses have, to do that. And even if you look at the and the government spending priorities also have been much more towards welfare than towards investment. So these are all choices we have to make. In an ideal world, we should do both. But if you only have that much income, what's the choice you have? And one of the examples I offer in the book here is Switzerland. It's the richest country in the world. And it's the 20th largest economy in the world. So it's not a very small economy either. And yet, it's the richest country in the world, but it seems to get the balance much more correct. It spends a lot less than the UK does as a share of its economy. And yet, people tend to be sort of, like happier because there's so much decentralization. I think that, we speak a lot about deregulation, but it's also so much about decentralization where they have 26 cantons, like little states within Switzerland. Each one has a choice to do what they want, rather than sort of being told from the top as to what each state should do. So it's a very bottom-up led model, and that somehow seems to work. They're super competitive. They have the strongest currency in the world. They keep getting capital flows. So there are models both in the developed world and in the developing world that we can learn from and see what are they doing correct and try to see as to what we can adopt here to do that. So it needs to have a bit of an open mind to do so.
Unfortunately, we have to leave it there. I've already kept you longer than I promised to. But for more solutions, they can buy the book. It's out in paperback now. Is that right?
Yes, that's right. Just came out. And I said that it's like a history of capitalism. And it's about how it matters to us. That as the common person, it's about sort of understanding that why am I feeling this way and what can be done about it to make life better for us. I think that's what I try to examine in the book.
Well, I really enjoyed it. So thank you very much.
Thanks. Enjoyed that.